Welcome back to Golden Rule Radio. This week we're watching gold doing a lot of trading sideways, while the dollar index has moved to an almost 2-year high. It's been in a rising channel for a while now, and finally breaking out of the trading range, the 3-point trading range we'd identified a couple of weeks ago. And so the dollar index is pushing up, other currencies pushing down, and gold actually not showing too much weakness, holding here around the 1270 level.
I think it's a really important point, Robert, as we throw this dollar index chart up here. You're right. I mean, it's been about exactly a year since we started this upward trend line. And, you know, keeping in mind through all that, we've seen a lot of volatility in gold. We've seen a $100 fluctuation just in terms of, you know, that high of 1347 here and that low of below the 1200, 1187 really. And so that's a lot of volatility for such a consistently rising trend line in the US dollar. So there's more than just the dollar that moves gold. But Miles, why don't you get into the technicals on the gold side?
Yeah, we argued gold should be stepping down, so it's not surprising, especially on some negative news coming out of Europe, positive dollar correlation there. Certainly hasn't been surprising to see gold pushing down a little bit. We came into that 50% line around 1265, 1270. I still think we're looking down in the 1240s, down at the 618 fib that we should correct down to. And then we'll have to readdress how things look once we hit that price. So do the bulls jump back in or not? One thing that should play out is as we stair step down to the 618, I would expect to see some RSI divergence, which would turn the price around, not necessarily permanently, but certainly bounce the price back up. So with this bounce off the 50% line, I wouldn't be surprised short term in the next week, a little push back up to like 1285 before we do go down and test that lower support level. Silver, on the other hand, is making its stair steps down and actually has already engulfed past that 618. So we've come back up to it today. And what was resistance is now support. So if we don't see silver push back above 15, I would argue we probably continue down, and we could see movement down as far as about another $1 to the low 14s, where we're testing some of those December, November pricing from last year. So we could see silver continue back down and look for some of the trend lines. But same story with this 3 drives down. We do have some RSI divergence showing up on the silver chart. So similar story, we could see a pop back up here over the next week or two before we continue down in silver. And I think this follows Robert's theme from the last couple weeks, sell in May and go away. We're rapidly approaching May, so it wouldn't be surprising to see some of the summer doldrums and opportunities arise in the metals market that we traditionally have seen over the last 4 or 5 years.
Yeah, sell in May and go away does not mean don't add to your ounces when you're looking at the lowest prices for the year. And all said and done with what you're talking about in those gold and silver prices, we've seen relatively no change in that gold-silver ratio. So still a major buy signal in gold.
Moving over to platinum, it seems to be a habit over the last couple of years that when you have 2 or 3 metals going one direction, there's always one doing the opposite. You know, the last couple of years it was palladium. We've been arguing for that reason the merits of platinum. So while gold and silver continue to step down here, platinum continues to step up.
Yeah, as we compare that to the palladium chart here in a second, just look at that platinum chart and realize that from the low put in earlier this year, even with this recent little pullback and inability to set a new high, we still are up 13% this year from the low. That's very encouraging, especially as we look at the palladium chart and realize that it, as a sister metal and what we trade against and look for value against, we're looking now at essentially a 12 to 13% decline in palladium at the same time.
Yeah, and personally, I do think palladium actually has some upwards movement to go from here, maybe up to around the 1,500 or so mark. That puts us right at its 618 fib since a recent decline off 1,600. So I wouldn't be surprised to see palladium and platinum marching upwards, at least for the short term. Platinum eventually hits an interim ceiling, turns around, comes down a little bit, palladium the same. So with gold and silver stepping down, platinum and palladium likely to push up over the next couple weeks would be my outlook. So we are between levels on the metals. However, there continues to be some fairly fascinating news taking place over in the S&P. question of interest rates not rising. Is Trump getting his way as the equities markets continue to push up and in some cases might even be inching past their all-time highs? So what are we seeing on the S&P, the Dow, the transports?
NASDAQ.
Well, if you look at a one-year chart on the S&P 500, what does that look like? A V bottom? Yeah, that's pretty much a V bottom. Not necessarily normal behavior. At the last quarter of 2018, the market was falling, and you see this V bottom right at the end of the year. And since then, we're up, 20% off of that V bottom. So we've had quite a bit of a rally, and like we said a couple weeks ago, the market was ready to go higher, and it has. Now we're kind of flirting with this 2,900 and change level on the S&P 500, looking like it is strong and wants to go higher. But obviously, pushing into the all-time new territory, you could see some volatility with, bulls and bears fighting each other over that all-time high number a little bit above 2,900.
Yeah, remember too on this V correction, let's look at that 2350 mark that we saw at the end of 2018. At the same time, gold had been climbing significantly, but that 2350 mark, that's the bottom where really the juicing in the markets occurred. Remember, it was a plunge protection team kind of approach to getting that bounce, and the market didn't necessarily buy it, and we came back down from 25 a little higher down to the 2450, and then we saw it really start to take off. And again, like Miles transitioned with, this is a dream come true for Trump, because he's been on the Fed heavily with these interest rate hikes, because a lot of the United States, a lot of the world looks at the American economy through the lens of the health and viability of the equities markets. So if they can do the S&P 500 movements and the NASDAQ and getting the Dow inching toward its all-time highs, I mean, you got NASDAQ and S&P at all-time highs. If you can see that, confirmed with transports and with the Dow, then that's probably more of a safe indication of good economic health. But until then, it's just easy money pouring into the markets due to all the quantitative easing and foreign countries that are dumping money into the American equities markets, in my opinion.
And we're also seeing the transports take a jump up. Now, granted, they're not pushing their all-time highs, but they're not too far behind. So they do continue to lag behind, but we're seeing the same kind of movement. So I do believe the next couple weeks will be telling for the equities market as we see the metals bounce around and kind of settle out where they plan on sitting for the summer. So that's going to do it for Golden Rule Radio this week. We, as always, appreciate you stopping by. If you like what you heard, hit the subscribe button, ring the bell, head on over to our website, McAlvany.com, Facebook, McAlvany Financial, or Twitter at ICA Gold. And as always, if you'd like to speak with one of us, you're welcome to give us a call at 1-800-525-9556. Thanks for listening. Have a great week.